Hello and welcome. I'm Patrick Curtis, your host and chief monkey, and this is the Wall Street Oasis podcast. Join me as I talk to some of the community's most successful and inspirational members to gain valuable insight into different career paths and life in general. Let's get to it. In this episode, Marcellus shares his path as a gas trader for over a decade. Learn how he survived graduating into the great financial crisis, how he got his first break, the setup at a large energy company doing prop energy trading, and how that was different from a trading house, as well as two key pieces of wisdom he shares near the end on how to position yourself for a similar career. Enjoy. Okay, Marcellus Wallace, welcome to the Wall Street Oasis podcast.
Yeah, it's good to be here. Thanks, Patrick.
So it'd be great if you could just give the listeners a short summary of your bio.
Yeah, for sure. So a bit about myself. Basically moved to the East Coast from the Middle East when I was younger, and then worked out through university. Ended up going to study computer science in university. Did a couple of internships in IT programming. Didn't really enjoy it. Switched to more of a business focus. Later on, did some internships at Fortune 50 company, some trade desks, different products. Ended up doing one of those internships was on energy desk, and I was in natural gas group. And some interesting things happened. I graduated in that 2008, 2009, fun times. So basically ended up graduating jobless. Desk opportunity opened up on the desk probably 4 or 5 months after I graduated. And then moved out to do that, and was trading, started as a desk analyst and was moved to being a short-term trader in about a year and a half from there, and stayed with that company, a large oil and gas company, for 9 years. And then after that, moved on to trading at a bigger, one of the bigger merchant trading houses for a few years. And now I'm over at a smaller hedge fund, doing sort of the same thing, mainly financial energy trading, natural gas.
Awesome. Thanks for that quick summary. So I think what's really interesting about your background is it's all been around energy trading or natural gas trading, but you've kind of seen or had the perspective from several different types of firms and several different cycles, right?
Yeah.
So I'd love to just, before we kind of dive into that, let's go all the way back to like undergrad. You said you're computer science initially. What kind of attracted you to the trade? When you got on the trading desk for that internship, what made it kind of stand out that you said, hey, I want to do this long term? And then just give me a little more detail in terms of like when the financial crisis hit and you were going into like your senior year with no job, what was going through your mind, and how did you like actually survive for 5 months before getting a job?
Yeah, exactly. I mean, it was funny. I won't lie. I think a lot of kids today are a lot more better prepared back then, and we weren't that much. But basically, my family, friends had some connections in IT, and so my goal coming out of going into university was like, get a job at Microsoft. That's like the great thing to do. And I had family who lived through the .com crisis and things like that. And I really had no idea anything about business at all. And then finally, I really started enjoying my economics courses. And I also did not like the aspect of just sitting somewhere and programming by myself all day.
Yeah.
So I sort of started to seek other things, and I read Monkey Business, and I was like, oh, investment banking, this sounds so awesome. Well, this is what I want to do. And I switched to like more of a pure business focus and looking at business internships.
It's probably when you found Wall Street Oasis.
Yeah, exactly. Yeah, similar idea. Yeah, around that time. But like, again, I won't lie, like computer science, your GPA gets pretty wrecked. So like even though I had a decent GPA, my other courses, and coming from a semi-target at that time in East Coast, like it just was difficult to really break in. So
break into like you're saying break into like front office investment banking.
Exactly. Yeah. Like our school got like, 1 or 2 banks who come in your sophomore year back then. And after that, it was like, okay, so you go work at Fortune 50, you start learning more about it, or 500, whatever. And I went there and it was just like, was too slow. But so it's like, okay, investment banking, that's really awesome. I got to do this. This is where this, it's a high upside money, time, all that. And my grades were just slipped a little bit, and it was too difficult on my next round of like internship time, and I missed out. All the banks that quickly interviewed. And then, went down to some buy side and just couldn't quite get it. It was always like the second or third candidate sort of thing. And then out of the blue was like this opportunity to come do energy trading in a totally different place and try this out. And literally, I had no idea about it. But I'm like, you know what? I'm going to get finance on my resume. This is great. And then investment banking 2 years from now. And, and, and basically I went there, and man, it was a great experience. Like, I did not really understand at the time, like how many different facets of buy side trading there is, or buy side money management. And I really didn't understand, we have customer deals, or we not. But basically my job was to do like more research for like more of like fundamental based trades around certain assets that the group had, or just straight out like speculative trading physically. And like
this was sorry to interrupt. This is for an internship, like what, your sophomore, junior year or something?
Yeah, right after sophomore. Yeah, we had like a more of like a semester structure.
Got it.
Yeah, so it was like a winter internship, and basically finish all my tasks. And back then, we so far away from big data, so these guys were just shocked. They'd be like, "Oh, giving me a project, it's going to take them 2 weeks. Macro up some stuff," and I'm like, boom, there you go. 2 days later, and sit there bored, waiting for like trading day to end so you can go up to your trader and ask questions and update the model or whatever. And I was like, oh, this is really cool. This is really what I want to do. And this is sort of like similar to stuff I've read. And they wanted me to come back, but this was right before the financial crisis. Everything was sort of hot still. And I was like, no, I want to try different things. I still really want to, try maybe get into investment banking or like equities or something.
Yeah.
And then the following year, actually, when I was there, Bear Stearns went down. And I remember it was like a Thursday or Friday afternoon when we got an email. And we're like, we're not trading with Bear Stearns anymore. And on Sunday morning, JP Morgan bought Bear Stearns. I'm like, oh, this is interesting. And, they had some positions they had to clear up and move to basically JP's group now. So I was like, okay, whatever. Things are, still not that bad. So yeah, basically from there, I really tried to focus on moving to finance. And my next internship, again, just couldn't get into that banking realm, GPA, stuff like that. So
you still ended up at a bulge bracket though, right? For a little bit?
Yeah, exactly. It was on a trading desk though, and it was on a money market desk. And the main reason I took that job, like I just wanted to learn, like, my energy trading fundamental job internship was just more like build up models, do this stuff. This is what we're doing. And then on the other side, in the bulge bracket, we literally were like, this is the guys you call every day. This is the money market rate. This is what you say, but you don't really try to, like, you're not even an intern. You're just like a person who works there, right? And I was like, wow, this is a totally different environment.
Because it was sell side, and instead of the buy side, you weren't actually like doing any analysis to figure out like what was a good trade.
Exactly. Like, yeah, maybe update some things with some macros, do a little bit of analysis, but your main job is you get us coffee, get us lunch, whatever. You get up in the morning and you talk to these set of customers. And so at that point, we were starting to get really bad, like late 2008. And there was already customers who were pissed off because they had owned like mortgage securities or asset-backed securities or asset-backed commercial paper. And you just could hear it. They were so pissed off in their voice, but they still had to like buy repos or something overnight.
Yeah.
And then similar story, like recruiting was absolute dog shit that year. And literally, I think a month into my internship, Lehman goes down. And I show up, boss is like, you should have been in like an hour early today. Why? Lehman Brothers went down. And we're not lending money to these US, it was a European firm, these US shops overnight. Like, doesn't matter what broker calls you, ignore them. for the next 5 days as we fucking analyze everything. And yeah, so that was like really wake up call, like, oh my God, what did I do? Maybe we're all doomed. Maybe I have to go to law school. Like, I really have no idea.
Well, so what's interesting is that you were there for it was like a long internship kind of it sounds like they kept you through that whole turmoil. I mean, they were probably paying you like really low, so they didn't care, right?
Exactly. They didn't care. They wanted you actually to start from the regular time because they wanted like a seamless, like one intern's in, next intern's in sort of thing. So they train you up. You come in like a few weeks earlier before like other people start like their investment banking and other internships. And it was just like very sell side. This is script you read. This is what you push. This is that.
You're basically a monkey. You're a trading assistant.
Exactly,
monkey.
completely. Yeah, and you get yelled at if you do anything wrong.
Did you get yelled at? Did you get yelled at a lot?
Oh yeah, I mean the guy who ran the desk was a total maniac.
Tell me a good story.
Oh, I mean, so like one time I like basically said, because the lady was leaving, I said, oh, okay. And then she's like, I'm leaving. And then so I said the same thing. I'm like, okay, I'm going to try to be a little friendly with this, Fortune 500 treasury guy. And I'm going to be like, oh, I'm so-and-so. Oh, I just came. I'm studying this. And he put me on hold. And he's like, you are an intern. Your name, I don't even care what your name is. Do not tell anybody your name. Nobody cares about what your freaking name is. You have no and nothing. You follow the rules. You just give them the rates. Whatever they want to do, you put in the spreadsheet. And I was like, wow, okay, man. And a few times I was staying late, and like the lawyer or whatever would come over, and they're like, oh yeah, you have to do this. And like, so he was like listening to tapes because they were getting lawsuits all over the place because of all the mortgage-backed security mess. Yeah. And I'm like, this is just totally not what I expected. But leverage buyouts were still pretty high, right? It was 2008. And then we were working on a really big one. And it seemed like, okay, the bank's going to be busy for like 2 years. And then the government things changed and that fell apart. And then like all the interesting deal flow left, right? So literally now we're just lending money overnight, receiving money overnight, repoing. And yeah, like, I mean,
can you explain that to listeners who don't understand the receiving money overnight repoing? What kind of business that is? Just a quick 30 seconds so they know what that means.
For sure. Basically, so like the bank has a series of desks, right? You have the equity desk, you have the derivatives desk, you have the fixed income desk, and then you have the money market prime brokerage desk, and then the prime brokerage with the equities desk. So our job was essentially the other desks are really in place to really make the money or make the upside on the customer flow. And we're supposed to fund an entire business, right? So if we're doing like a big deal with a pretty big private equity firm and they're trying to like buy telecom or something, they're going to go out and do bonds and do this stuff. Well, for the traders to manage that flow, they need like a significant amount of capital and margin with different counterparties. So every day we had a different number we had to raise. And if we don't hit that number or we're long or short that, the New York or the next office has to pick up the slack that way. So essentially you're like taking money from all the other desks, like you're taking margin from everybody else. But at the same time, you're like the most important part of the market of the bank, because if we don't get this money all overnight, like nobody else's business can be funded.
You're basically like you're helping manage the flow of capital so that there's like the right balance each day.
Absolutely, yeah, exactly. Okay. And basically,
is there a specific name for that desk? I mean, I don't know trading very well, but
it's just the money markets repo desk.
The money market. Oh, the market repo desk. Okay, got it.
So, for instance, we were doing treasuries, and then another guy was doing repos, which was my boss majority of the time.
Yeah.
And then all the interesting stuff nobody really wanted to do. But if they wanted to do it, the structures would come up with the product, the trading, the derivative guys, and we would be just like, okay, we're going to sell this amount of commercial paper as a better rate for 3 months or whatever. But at that point, that business was pushed aside and everybody was just doing overnight treasuries and money. And that's what we were doing essentially. So that's how essentially the bank funds itself.
Perfect.
Yeah. And essentially, so Lehman goes down and I see 4 guys leave the office barely say bye to each other. And I turned to the guy and he's like, yeah, everybody's going to meet him at the bar later. And I was like, okay, so apparently this is bulge bracket trading. Like literally you bring your box to desk every day because anytime you have to fill that box, you got to be out of there within 30 minutes. So it was all very exciting that
People
way.
just getting fired. People just getting fired left and right.
Yeah, exactly. Like just out of nowhere, like boom, this is the world. And recruiting was, super difficult for anybody who's around that time. Like I have friends who, are in consulting, investment bank, like private equity now, who literally had no job at that time, right? We just coming out like there's just no seats.
And you were going into your senior year, basically, or you were in your senior
year, and just like, okay, well, you just gotta, try to crush your grades a little bit more in your senior year, and then just.
What was your GPA on a US kind of scale? 4.0 scale?
Yeah, my GPA was around like at 3.6.
Oh, not bad.
But but again, semi-target.
But not semi-target, non-target, semi-target, especially for the US. And then basically, so tell me what's going through your head. So you're coming through senior year, you're approaching graduation, you have nothing lined up, the whole economy's falling apart, you're heading into the great financial crisis. Are you thinking, okay, I'm moving home? What's the plan? And tell me how you ended up with what looks like on paper a pretty good job eventually, but it took you a couple years to get there.
Yeah, it was funny. I won't lie. There was a few guys who really were planned and had the right internships, so they got picked up right away. A lot of people were then looking at should go do a master's program, do that. I actually really senior year, you especially if you're in a business more oriented program, you start taking majority of courses you like, right? So I was able to take majority of economics and finance courses, and really those are the ones that I can easily do well in. So I was able to really get my GPA up that way, and then just try to see whatever opportunities come around. I mean, I would say at that time, a lot of us were not really versed in market networking the way kids are now. Our career center would be sending out some, but look, right now is a really tough time. There's just not a ton of jobs out there. And one comes available, 20 of you people want to talk about it. And we didn't really know how to track down alumni that much.
LinkedIn wasn't as big back then.
Exactly. Yeah. And exactly. There was no LinkedIn, stuff like that. And our alumni database was just being really built out.
So you were just on WSO trolling the entire time, trying to send private messages, figure out anybody who would be willing to
exactly. So so we ended up doing our CFA with our last semester or whatever, just That's to smart. Hey, you know what? We don't have a job lined up. It's not, especially when you're taking those high-end accounting and finance courses, not that much more. It's sort of similar stuff you learn.
Yeah.
And you're still able to have a lot of fun, senior year, you can take a little bit relaxed, right? You sort of but that was the problem.
But you were only unemployed for 5 months post-graduation, it looks like. So how did you get that? I mean, it seems like everyone would be going after that.
Yeah, that's a funny one. I mean, when I graduated, basically when I moved home, lived with my dad, did some tutoring or whatever on the side, just stuff like that, and just, start applying to jobs. And then, my friends are like, oh, I got into this middle market bank, or I got into this, or I'm doing this master's. And, people are starting to get placed. And I was literally at that point okay, I'll take anything, investment banking, or I'll take anything in asset management side of the world. And I was getting these back office sort of roles and asset management. And I was just okay, I guess I'm just going to have to go to grad school or something later. I don't.
So you had some offers for back office, and you're just I'm not.
Well, I was at least getting interviews, right? Those were the roles that were available.
Yeah.
And then one day I called the guy that I worked for, and I said, hey, can you give me a reference for this role? And it's a pretty big firm, and he's like, oh wow. And then he called me, and he's like, oh, we may have an opening coming up here because someone just got moved groups for a desk analyst. And I'm like, oh wow, that's amazing. Yeah, sure. And just by luck it came about, and I was able to,
So you were networking, but just not by a lot, not with a lot of people.
No. So I got lucky that way, and and came onto the desk and basically was a desk analyst there. And yeah, so, and then at that point, again, that time period, a lot of things changed, right? When I did my internship, people were different, paths were different. And I came back and I think we had like a reorg 6 months into my job. And my boss changed right away and they cut the group down in half. And basically margins.
How did you survive all of that? What were you getting paid? Like you're getting paid like $50K?
So my base pay was like 70,000.
Oh, pretty good.
Pretty good, yeah, it was. And really, the way you survive is just to be the cheapest person that they like have, and they're like, you're the one that's going to survive it. You're just trying to kick out like all the people who are like in a mid-level level, and try to retire the guys who've done well, right? Like the MDs, it's time for you to go, right?
Retire the guys that are super expensive that are like coasting.
Exactly, yeah. So that was sort of the way, and basically was able to do that, and then when my boss changed, I was able to start working a lot more with our like internal fundamentals guys, like because we had specific people who like their job was just to, I mean, nowadays we machine learning all their stuff now.
Well, just give me a framework. Step back for a second. So this was a large energy company, right? Tell me what a trading analyst even does, and how is it set up? Is there like there's a separate trading kind of arm of this energy company?
Yeah.
That deals with like flow, like is it flow trading? Like what is it? Is there any prop going on, like where you're making directional bets, or is it all just like just flow stuff? So tell me a little bit about how you started, and just give me a framework for it, because if people are as clueless as I am, if the listeners are as clueless as I am, then it would be helpful.
One of those areas not that much known, but yeah, for sure. I mean, basically your job is like it's just like a bank trading desk. You're the lowest man totem pole, but we have like a scheduling group that schedules all the physical assets, and some of those people are more senior people. Some of those people have different skills. So like they're like more like mid office. They sit beside the traders and everything. So you have to be like a conduit between them, risk, and the desk itself.
Scheduler. It's called a scheduler, basically.
Call him a scheduler, yeah. But yeah, it's like a operations person. And then essentially, like the way the desk is set up is you have, certain marketers that were, well, first off, the company, is like a full-on subsidiary of these large energy companies. And their goal is to, one, market the product, and two, to really prop trade around the right spots. And then ultimately, if they can find someone who's really, really good, they just like become more like, as long as other parts of business can handle it, they have a prop trading within the business, right? So like our desk was like a hybrid of that, where we had essentially a group out that was talking to customers on the ground level. Then we had senior originators who were working with utilities on longer term, larger deals. And then the trade desk gets all that flow every day. So they have to manage all of that flow, and manage and buy opportunistically assets that can help do that. And then likewise,
you're like buying contracts, selling contract. You're buying and selling contracts for like, give me an example. So like, what are we talking about? Like oil and gas, like natural gas, like.
You live in Northern California. So our West group would be buying and selling PG&E Citygate, which is essentially gas that's being sent to, I think Procter & Gamble has a plant out there.
Yep.
So they're like literally like, okay, this is how much gas we use for a year. We need to hedge it. And then our person would be dealing with that. Now, if they want to do something more complicated, like, oh, we're building a new plant, or, oh, want to, take out pipe from Arizona to there because we think the Arizona market is, then they'd be working with our originator to go and purchase the gas from a producer and then move it there. And then the trade desk job is to like value all of this stuff, right? So essentially,
you said value or evaluate?
Like value all of it, right? So essentially, like we need to price it up, and if we need to work with structures, we need to work with structures. If not, we just give what the price is. Today the price for winter gas in the PG&E is this, right?
Right. And some sort of spread or margin on it so that you guys can protect yourself and flow it off.
Exactly. And that's what our originators and our salespeople would do. So that's exactly sort of the business. And then, like, for instance, now we are having a good year, or our sales guys are doing well, or we know we're having this Procter & Gamble deal. The guy has a great relationship. Okay, we know we're going to get this deal in 2 months. So we can start to build a position around that. Okay, we think San Francisco is going to be this. And then from there, that grows to like some of the more senior guys who are just able to like financially trade, right? Because essentially they're either going to give their positions to the asset side guys, or they're just, or they're going to make money and nobody asks questions.
So it sounds like initially it was like 4 years, kind of learning on the flow side of things, doing more of like, helping the operation side. And then you became a senior gas trader where it was more like trading prop positions and just basically saying, hey, just go make money. You know what you're doing now.
Exactly. Yeah. So like, again, we were very large, pretty profitable at the time. And essentially when you are running your asset book and they want to start moving you up, they're like, okay, now we give you your own prop book. And, you can put positions in your prop book, and you can put positions in, and you can help manage the asset book. And I started to mainly being focused on that. Like, I've always been more interested in the fundamental side of the market, be it whatever the product, sort of that way. So that's when.
And that's where you can make a lot more money, right? Do they give you a percentage of the piece?
Exactly, that too, right? Yeah, like.
So tell me how the first 4 years kind of doing the more operational, so you went from scheduler eventually to trader, or like.
No, so I actually skipped scheduling. I was a bit lucky. It's sort of similar to working in a bank environment. They sort of moved me from being a desk analyst to like right away to like helping the fundamental guys come up with, daily fundamental views for our traders, right? So again, if we're looking at San Francisco, I'm helping figure out how power markets are moving in San Francisco because our guys aren't well versed in power. I'm not an expert in it, but I'm helping build models to help them gain more knowledge on that. And essentially that would, so like
and this is just, how do you even do that? How do you even learn that? Just watching other guys and gals doing it?
It's mainly watching other guys. You go to a few conferences and then you just delve into the data, right?
Like financial models is like supply demand dynamics. Like, are you trying to project out basically what's coming down the pipe in the next few months, whatever, that kind of thing?
Absolutely. Yeah. All commodity trading is literally just supply and demand curves. Yeah. And then, so here we're building Excel models where historically, I can go on the government EIA site and I can get what the demand is in California gas. And then from there, I can get an idea of what like is Northern California gas, and then how much of that is power, this, that. So building those kinds of models, figuring out where there's pinch points in the market, what month it is, and so that's essentially the work we do.
Cool. So tell me about, so I mean, you were there for almost 7 years, kind of going from, gas trader to senior gas trader, going from, eventually prop.
Yeah, exactly. So basically, I would say, yeah, you said like 3-4 years in, I basically more focused on prop trading. Saw the bigger upside there. That was sort of more.
Tell me about money there. So what were you doing? You made $70K your first year. Did it just gradually kind of bump up, or were the big bonuses? How does
so like we were like, I would say $70K, and then like really because we had a pretty good desk that was like getting good deal flow to begin with, and then we had talented traders on top of that. Like analyst bonuses were like 50 to 70%, depending what bucket you're in. I mean, maybe 30% if you're really low bucket.
Yeah.
And then when you got into the junior cash or trader roles, you move like now you're like moving up to like more of a senior person in the company. So you're like approaching like probably like $110,000 salary, 105 maybe. And then they're like, again, it's a lot of the bonuses are like bucket structures. So your bonus is they like a really good year for everybody. They try to keep you around like one-time salary as your bonus. Really, if you're awful low bucket, your group is, you're going to be like 50% of that, and then top bucket can go to like 2 to 3 times salary.
Got it. So you're basically your progression over those 7 years was like 70 your first year, maybe getting close to six figures in the next few years, or a little over six figures?
Yeah, I would say once I was like a more senior, like guy who managed the assets and stuff, been managing for 2 3 years, I was probably around 300 to 400 in a good year.
300 to 400,000.
Yeah.
Okay.
And then in our like one of our banger years, everybody calls it the polar vortex. I don't know if you were living in whoever's living in the East Coast, New York and stuff. Q1 of 2014 was super duper cold in New York, Boston, 2015 as well. And yeah, I mean, at that point, the guys who were more senior were probably approaching $800,000 level. And then of course desk heads above that.
And why was the weather being so cold? I mean, I can speculate, but obviously prices would increase, but had they made correct directional bets? Is that why? Like, I mean, because like if you're just doing flow and you're just kind of making sure things are even, you shouldn't really care if it goes up or down, right? But you're saying like they had enough ability to see that there was this polar vortex coming, and then they kind of positioned the book appropriately to take advantage of it.
I mean, truly, I think Goldman was the top shop that year. I don't think anybody ever sees polar vortex coming. You just sort of like put on what you think is like best value trade, and then some people, depending on how gutsy they are, or whatever. And then some of it is luck, right? So that year the weather all lined up, supply was looking low. For ourselves, because we bought assets that would do okay in certain years, they like just blew out that year. So like we owned storage, and we were able to really put on more risk around our storage, and we were able to do much.
So what
better.
What do you think if it was the opposite? Let's say it was an abnormally warm year. What would it have looked like? Like you would have taken on big losses?
In an abnormally warm year, you would barely you'd almost lose like 10% of the money you paid for the storage. So then you really got to trade against it, and then the good prop guys do well, while other people just depend on hopefully customer flow. Or I mean that's
so you are directionally always hoping for colder. Or no?
Yeah, I mean it depends on the setup. I mean I've been short a lot of my career. Natural gas has had a very long-term downturn since I went into the industry. But yeah, I mean absolutely it's just like the guys who had the huge hedge fund like equities. Just owning vol is always easier to make money than to sell vol. And yeah, we went to gas prices went to in Chicago, I don't know, $50-$60 that year. New York higher, 150 maybe one day, or I can't remember. And yeah, we had assets that we were able to take advantage of that. And then on top of that, because once you're doing well, you can just add on risk, and the company's not asking questions, right?
Got it. So let's move on, because you have other interesting jumps in your career, and I want to get the listeners. I don't want to keep you too much longer. Real quick, so you're doing really well there. Almost 7 years. You're now a senior gas trader. It sounds like you're making really good money. Why jump? Why look for something different?
So like that in those kind of companies. So like what happens is, and it sort of I guess happens on the bank side too, is you really have to keep moving up. And you have to keep it becomes a bigger politics game, bigger story that way. And you have to start to really succeed, mentoring people, all these other things. And they don't really care if you're doing that well as a trader, because at the end of the day, if we're working on a $200 million origination deal over 20 years with, India, that's going to outweigh anything like most traders do. So they just view it the business that way. And I didn't really fit that mold. So then at that point, you start to look at, okay, do I go more to a merchant structure where you sort of know what the costs are, things like that coming in.
But you said you sorry to interrupt. You said you didn't fit that mold. Can you unpack that a little bit? Was it becoming more of a sales role and less of a trading role?
Exactly. It becomes more of a sales role, more of a personality, make sure everything's okay.
Politics. Yeah, I get it.
Politics. Because it's the company's brand, right? And I mean, it's the same at a lot of banks now and shops, where it's just at the end of the day, they have the bazillion-dollar balance sheet, and they can do those really big deals, and nobody else can. So it's going to be very difficult for anybody to compete with them. But at the same time, they're well, is it really the originator, the trader that's special, or is it just our business, our brand. And so that way I was just like, okay, there's not a lot of, I don't think I can go on to being head of trading or whatever, because I'm going to be stuck in meetings all day, and I'm going to be on Zoom and be talking, okay, this person had an argument with this person, and or we lost this customer, why? And I was just like, I'm not fit for that.
Got it. Okay. So what was your thought process? What are the exit opportunities of a senior gas trader at a large energy company?
I will lie, exit opportunities are not like, because you're pretty niche at that point. So it's like you got to find the right place that works for you, offers the right upside. But once we had the polar vortex in those years, news also started to come out about like how people pay. And you started to see like, okay, these places where these career make it to the top, be ahead of trading, get the high salary, everything. They don't pay that well based on, other places that are just, smaller, more nimble, more performance based. And at that point I started to look around, because I'm like, hey, you know what, I'd rather, bet on myself more so. And talk to various hedge funds, talk to other people. And also banks were exiting the space. So merchants were gaining more of a foothold in. And I ended up going to one of the trade houses, one of the larger trade houses out there. And they were just in the span of like really growing their gas and power business. And I think when I joined there, like they were the second or third year in, that they really own physical assets and everything. And like a much different mindset, right? Basically,
explain to me when you say a trading house. What does that mean? Like, do they have their own capital from LP, or are they raising capital from LPs and trading it? Is it their own prop money that they're trading? Tell me how that works.
So the big trading houses are like, the Trafigura, Vitol, Victoria, those kinds of shops, those guys. And Cargill or some other ones in there too. Castleton's another one now. So those kinds of shops, and essentially the guys who own the business have some of their own money in, similar to like a hedge fund structure.
Yeah.
But then they are buying these assets that make billions of dollars in revenue every year. So they need to borrow a ton of money from various banks. And their core business is turning over these assets and making a bunch of money. But because they start doing really, really well, they're able to then, put on their own positions, and they're able to, basically to take way more risk, right? So like,
so explain it to me. So like, let's say the hedge fund you went to, it's like we'll call it a trading house. You're saying, let's pretend this people who founded this have $100 million.
Mm-hmm.
You're saying they would then leverage that up to have buying power of what, a couple billion or something like that?
Crazy. Yeah.
They'd go out, they'd purchase, like they'd bring in traders who are good, and then start playing in the market, right? And basically, yeah.
Yeah. So like that trade house's main focus is crude trading.
Okay.
And they own like crude storage everywhere. And then they own crude vessels everywhere. And then they own like pipeline capacity. And then when we were moving into gas and power, we were taking large positions in California, in the Northeast, because producers were doing a lot of shale gas, things like that. And you really get these originators come from the banks, because really a lot of these businesses were bought from the banks. And they're working on, I like the oil and gas.
Like, are these trading houses, they're not buying the actual the underlying companies, they're buying positions and contracts for.
Exactly. So like, for instance, they would be like, we're offering credit to these producers, and then we're going to offset their credit in the market, and we're going to manage all of their assets. And all they're going to tell us every day is how much gas they produce, and then we're going to balance that. And the larger oil and gas companies also do that, but there's some riskier deals out there, right, that they can't touch, or like, they have good credit, there's that. But these guys can come in, like a Trafigura, or
these guys can come in and do a higher risk.
Exactly.
Often make higher margin
deal, which the banks used to do, and some
the banks can't do it as much, maybe because of all the prop trading restrictions and stuff like that.
exactly. Volcker rule was a big one, right?
Yeah.
And yeah, so they would be, so like this originator would do a $40 million deal. Well, somebody's got to manage it. So now you have an entire imprint there. And now they're like, well, we actually have a ton of data. We have a ton of analytics. Like we just want we want people who can come in and make 20 million a year or something on top of that. And that's when they start to really grow out. And I mean, some of them, it all depends. Like if the company is owned by four guys, right? And they know like
Owned by what? Owned by what?
Sorry, if it's owned by like three or four guys at the top, and they all know that like we're gonna cover our costs this year. We closed this big deal last year. They can risk their like half their year, right? And again, I saw that at the oil and gas companies, the big guys too, but there was at least like a little more okay, like explained, or if it was a big loss, it was because we were working on building a power plant that didn't happen or was hedged wrong or something.
Mm-hmm.
This one, I literally we're just like, oh yeah, we like this position, we're going max small, and you're like, well, he owns a company.
Well, like super concentrated bets, basically.
Exactly, and that was it. And then so basically, they wanted some people like myself to come in and help either build a new business or help the current physical businesses. And then the moment you do that, that's like, congrats, you earned your salary. Now we expect you to prop trade on top of that. But we're not going to give you really like, it's not like going to Millennium or Citadel or something example. We're going to give you these very specific risk rules and this and that. It's more like when you're down $3 million, we'll call you.
It's like, it's the Wild West. They're basically saying, hey, just go. They're saying, hey, how much? So what's your P&L though? Like how much money do you have to trade with? So like you paid for your salary. Great. Now.
Yeah. So like your seat cost typically is going to be like 2 million nowadays in those kind of places. And then that's the thing. Cause like, again,
2 million a year.
Yeah. Like, so you have to make 2 million profitably to pay back your seat, which is like, and then in,
why is it $2 million? Is this just that for the access to all the markets and all the analytics?
So like that's the thing. Again, it's all discretionary for most. Some of them do give you a percentage, write it in, but a lot of it is discretionary, and it's really based on how many businesses we have, how many people we have, and do you believe in the brand long term, right? And so essentially,
I don't understand. Sorry, I don't understand. What do you mean by like when you say it costs 2 million for your seat? Are you saying like is this the for the trading house, this is their cost to kind of put you in that seat to give you everything?
Yeah, that's their view. So their view is that we have 4 traders in your group. Your costs are 8 million, and then you have your back office, your middle office, your accounting, your lawyers, everything. So you guys got to cover all this, or nobody's getting a bonus.
Got it.
And that's and like if we had a really tough year in China, we may boost your seat cost a little. And if we had a really awesome year in Germany, we may bring it down. So that a lot of the larger guys are now fully very discretionary that way. So a few of them are still formulaic, but like when I came in, a majority of them were like just like, look, this is what people get paid, and you basically would have to wait after a good year. Because then you can call up a headhunter, call up all your buddies in the street, be like, this is what I got. And like, whoa, that makes no sense. Or, whoa, that's awesome. You have the best seat in the town, because it was discretionary.
Got it. So they were paying, the $2 million wasn't payment to you necessarily, but it was just the cost overall. So how much were they paying you based similar to like, what was it, like 120, 150, something like that?
Very similar to the majority of senior buy-side roles, where you're making 200, 250 base.
Yeah.
And then if you're going to make more than that, you better like be like bringing in an actual full-on physical business, because they're like, well, you got to have like some constant cash flow here, right?
Explain the physical business aspect of it. What do you mean by that?
So for instance, my boss would manage a lot of producer deals. And because again, we were at this trade house, we were able to take credit with like private equity backed, like really crappy companies. But they're just producing crappy gas that nobody really wants and getting cash flow. So all they want to do is they just want to hedge. So they want some exotic hedge and they want to make sure their costs are fixed.
So if you're bringing that deal into you're saying, so if you're bringing that deal
exactly. And for us to manage that, like anybody, you have to own like physical assets and you have to like buy the gas from this. I mean, essentially on Twitter it's called shitcodes. You have to buy from these shitcodes and you have to move it to the market every day. So you have to hire a scheduler. If that scheduler doesn't show up to work, we have $2 million of risk on the day. So somebody else in the office better do it.
Yeah.
So like once you take all of those responsibilities, they're willing to give you a bit more of a bit higher base and stuff like that.
Makes sense.
To be more on par with like the head desk head at a bank or a large oil and gas company.
Did you bring any of that business, or were you just really more just a prop kind of lone gun?
I was really more like a prop guy, but I did do some of that stuff when I was at the oil and gas company. So like I would go and be like the guy who, you know, when the private equity guy wants to really, and again, it's not like the investment guys. It's more like the operational people, right? So they want to come in, they want to be like, okay, like really, what are we thinking about this market? Or why are you trying to get me to do this? I'd be like the guy who comes in and be like, look, this is what we see in the market. This is what the vendors see. Get them closer to our deal structure, sort of thing. Or if he brings up new things, then go back to my boss and propose things that way. Some other guys did bring in direct business. And
this sounds super lucrative, man. Like, so what's your best? Do you mind sharing like what your best year is, and then like what your average is in the last like say 3 or 4 years? It sounds like you were already doing really well at your the large energy company.
As I said, like the bigger year at the oil and gas company was like
the vortex year.
The vortex year was like, you know, we a lot of us approached 7 figures, and you know. I would say in like a top bucket year where it's not a polar vortex, you could pull down 600 US sort of to 700.
So you're saying did you make over 600 one year?
Yeah.
You did. Yeah. And so like now is like in a more normalized year, is it closer to 5? Or is it still 6, 7? Cause you're a head trader somewhere, right? So but yeah, so like the trading house, the way they work is essentially, as I said, you have an unwritten discretionary, you get 10% of your book. And then once you cover the 2 million or whatever your cost, everything from there you get 10%. And really they're looking to hire guys who make 10 every year, which is not easy always. If you're not making 5, they probably will not want to keep you around unless they really like you or you came from somewhere. Mm-hmm. And then, you know, there's people out there this year who made 40, 50. So you can think about how much money that comes in. Yeah, 40 to 50 mil, and instead of making 10%, they're clearing 4 or 5 million in the year.
Exactly.
So tell me about like, is this normal? These numbers seem, you know, I interviewed another trader way back, like I think episode 30 something. This is like 160. So my memories, but I remember him getting paid well over 400 pretty early on in his career as well. Are you just talented? Is this getting into this industry to super lucrative? And tell me about the risks associated with, obviously.
I would actually say like it is like other buy side roles where it can be really lucrative. The only difference is like I see like a lot like now with these like equity sort of path guys, go banking, hedge fund, this, that. Like unless you go to a multi-manager or something, you have a designate, they really have difficulty tying your compensation to the buck. While on the commodity side, if you are good, or and really the head of the company, you know, he was like swinging hundreds of millions of dollars, days or weeks, like, you know, it's possible. So like, it's more like these guys are actually like just as crazy smart as some of these like top hedge fund guys. So they have the foresight to see, you know, in 3 years, Europe looks super tight and I need a European team by 3 years. So I'm going to start hiring these guys. And if I have to bring someone from a bank or someone, I'm going to pay them a higher base, right? But by the time we get there, and we're up 8 million or whatever, you know, beginning of the year, and he sees a bigger opportunity, he's going to be like, all right, if I have the right people, they're going to ramp it up. If I have the wrong people, I'm going to get rid of them and maybe bring in the right people. and really it sort of becomes their position, right? Like at the end of the day, they're getting 90% of that, right?
Right.
So like that's where I would say like we've had some very unique opportunities, but I mean I've met some guys who are like, they'll never help manage anyone, build a book, anything like that, but they're just like talented traders and they know the industry, and they can put on the right bets at the right times, and develop that. This year we had some really unique events. We had a polar vortex in Texas that really just knocked up the whole market. But we also had a crazy cold Japanese winter, and in Europe been cold. So like commodities have actually definitely come back into the forefront after, I don't know, 10, 15 years here, and call it the super cycle, as some people call it out there. So I do think there's definitely like room for people who are good that are going to do well and get compensated high in the next few years. But I would say in the downturn years, like a lot, you'd have to be like almost a desk head, a senior person, to be able to get like 10% a book or something and be able to have the ability to put on the risk, like at a Millennium or something, to make at least 5 to 10. And I mean, if you're not making that, it's not worth their time. It's not really worth your time. But ideally, yeah, they want to find the one guy who can ramp to 50 or whatever.
Yeah. So tell me a little bit about, like, just for kids listening to this and they're like, how do I even get started into this? They're at school and they're thinking, hey, this sounds better, like getting onto the buy side of like actually trading and taking directional bets. This sounds really exciting. How would they even go about doing that? Like, what's the best way to set themselves up?
Yeah. So for sure, I mean, nowadays, like all trading, we are more quantitative leading, and we have a lot more big data stuff. So like you definitely want to have not just like an economics background, but you do want to have maybe, I mean, like at least some sort of like I code or do some Python or something like that.
Python, data analytics, SQL.
Exactly, because it's just going to help you like get through all of the data, right, nowadays. And then after that, it's just like, okay, now is like, are you really interested in the physical side of the business or the paper side? If you're really interested in the paper side, you're just doing the exact same thing as the guy who wants to start out of the buy side at 0.72 or whatever, right? You're reading the right books, you're coming up with investment ideas, you're following the market, you're doing that. If you at some point you're like, no, I really am more interested in the physical side, then you either have to figure out, are you a really soft skill, salesy strength person, or are you going to be more of like a data heavy sort of person? And if you're more of a data heavy sort of person, you just have to start targeting those specific firms, right? So like, there's a couple oil and gas companies out there who are like known to, hire the top people from schools, UT Austin, places like that. But really they'll take anybody, right, who is quality, right?
Well, can you name some of those firms for the listeners?
Yeah, sure. So like the biggest and best known one on the gas side is BP. BP is basically like you go there 2-3 years and like you have the ability to become a trader after, or you just will gain enough knowledge from all the guys there that you'll find your foot somewhere, then like you'll land somewhere in the industry. And they'll do similar thing. They'll like run you through scheduling, run you through things like that. Then you have other firms like a Trafigura who will literally say, we just want someone smart who's interested in the physical side, but understands that you're not probably going to make money for like 4 years. And if you're willing to really learn the business, we will give you all the tools to make you a niche expert in that. And then
Trafigura, right? Trafigura is.
Trafigura is like very, very hardcore about their graduate program. That
they do more than just energy, though, right? They do across. It's like prop.
They do, and that's my point. Like they may put you like on a silver desk when you want to trade power or something like that.
Yeah.
And then some of the banks will still recruit that way, looking for specific people that way. But like for instance, power, like they'll look for a lot more quantitative people because there's a lot more at times, lot more data they're working with, a lot more stuff that way.
Do you feel threatened at all? Because would you consider yourself a data person? Do you feel threatened at all about these younger kids coming up with a much better data background and analytics background than you?
I do at times, like I do find it funny. Like I would say, like I use some tools, and I think like my boss at the time would get reports from like 7 analysts at the oil and gas company who were like the specific analysts in each area. And those guys are probably running Excel sheets that have like 10 data tabs behind them and massive macros. And they're summarizing all this and they're sending it. And now I can literally sit here and go through like all of my models. And I'm like again, like we're not super sophisticated. We're not a Citadel, Millennium, like Castleton's like on the cutting edge of like big data these days. And I can do all that stuff literally in 30 minutes. Like it's pretty wild. But like I think it's just going to get more so that way. And then a lot of these firms know they've lost their information edge. So like for instance, there probably was a guy at Vitol or wherever who wrote in some spreadsheet for 10 years, like this is what this does. And somebody's inherited that spreadsheet, and at some point somehow it's found its way somewhere. And they have like gone to some really smart computer science, like computer engineer kid, and they're like, look, can you recreate this? And they have. So now we literally have vendors who just are doing big data stuff, like WinMac, Enervis, all these guys. So like I do think, yeah, absolutely any part of trade gonna have to be data versed in the future. That's just a part of it. And the information edge is getting harder and harder to take. So there's upside and downside in that, right?
Cool.
But yeah, so for sure that would be. But yeah, as I said, they would have to target those sort of specific sort of programs that way, and then really be willing to, if you're gonna be like a physical side, which again, as I said, like the polar vortex, one day gas is trading $7, next day trading $30, the next day trading 14. You're going to be able to buy physical assets that just let you capture that arbitrage every day, right? To some extent, like you're not 100%. But those kinds of people, like they're not going to let them they're going to have to be people who take 2 years, be well versed in the industry, so forth that way. For ourselves, like we target kids who are data heavy, data interested, sort of similarly. And then at the same time, you have an overall interest. So like you may not be physically there scheduling it all the time or touching it, but you have an idea, right? That like, hey, look, like this power plant actually heats a bunch of people's home. And if this nuclear plant goes down, like this is a real like situation. So we still do look for that interest, but I would say the larger, like majority of the larger trade houses, they really do try to find someone who's like, look, I'm going to sit here, learn physical business, learn the ins and outs, and then after, 2-3 years, get my chance. Sort of that way.
Makes sense. We appreciate you sharing all this. Any final words of wisdom for the listeners out there in terms of how to prep themselves before we call it?
Yeah, for sure. All I would say is, like I do think, especially with the competition out there, I just think I do think that your GPA is so important. So really, like treat it like a job your first couple years in school, because now kids are getting sophomore internships and so forth. So like I get it, we all want to have fun, and I did too, but like that's a lesson that I didn't really learn early on that side. And then I think the other side, like yourself, got other people change. I think as we get into more of a data intensive world or technology reaches us, I do think, I used to hear from whatever grandparents or whatever, the best time is high school. High school's awesome. And then high school is okay. And then college, college is the best time of your life. Nothing gets better at freshman year. And you're like, and then when you start making money and you're younger, you're like, okay, I can actually do a whole bunch of stuff. Like I just have to be willing to quit my job. And
lose money for 6 months, but if I save this money, I can do all this other stuff that I never imagined I could do. And now, I mean, I'm seeing people who I know who are, I would say, in their 30s or late 30s who are completely finding their passion later in life and stuff like that. So I would say I don't think there's we are getting to a world where we are more technology, and you're not just going to be working for that same company for like 10 years or whatever. So think of it that way. Don't put so much pressure on yourself. Like, oh man, like, I didn't go to that party last week and I didn't get this interview. Oh man, nothing works. Like, well, think about it. Like, actually, people are, finding their passions way later in life nowadays. So
yeah, if you don't find your path right away, it's not the end of the world. Yeah, it could be harder, but life is long, right?
Exactly. Yeah, that's the way to go.
To have some fun and hopefully find your way. Great, man. I really appreciate your time, and I really enjoyed the chat. Thanks so much.
Thanks a lot.
And thanks to you, my listeners at Wall Street Oasis. If you have any suggestions whatsoever, please don't hesitate to send them my way, Patrick at wallstreetoasis.com. Until next time.